In today's video, we'll discuss why I'm buying Disney through DISO, DISO, the new Yieldmax covered call ETF on Disney. Sure, it'll probably have a pretty big dividend, but we can't just buy every Yieldmax fund we come across, can we? So if you stick around to the end of the video, I'll share with you why I'm buying Disney and how to play it for maximum returns. So we earn over $100,000 per year in dividends at this channel, and our performance and value shows that we're up 35% for the year. 35%. The SP is up 12, the Dow is up 3, and the Nasdaq's up 25%. So we're beating all the indexes on a year-to-date basis, and on Friday we were up 0.46%, so we also got good performance there. If you would like to experience similar results and performance in your brokerage account and need help living financially free out of it, email me for my e-guides at aikentod48@gmail.com. When you buy my e-guides, you get my phone number to call me anytime at for free, as well as access to all of my Discord channels. If you think you're ready to access the Discord chat room without buying my e-guides, I'm going to now link that in the description below, my Patreon link in the description below. Just be aware that this standalone option for Discord does not come with my phone number, which is the real benefit of buying the e-guides in my opinion. So let's go ahead and get right into the video, guys. Okay, why am I buying Disney? All right, Disney is, first of all, a large part of the indexes. Okay, so as you know, here at this channel, we use an indexed approach to get the performance that you're seeing, okay? So if you tie everything to the indexes, you're going to perform in line with the indexes. And if you use a little bit of margin like I do, for every $1 you put in your account, you get $4 of purchasing power, then you can get extra performance and actually beat the indexes like you're seeing me do. It's just that you want to make sure that these indexes pay you dividends so that the dividends can pay back the margin, okay? That's the whole way I do it at this channel. That's the whole secret to my success, okay? This margin debt that you see down here, I just use a fraction of my purchasing power, okay? 250,000, look, that's just a fraction up here of my purchasing power. For every $1 you put in your account, you get $4 of purchasing power. So I have almost $1 million to play with, and you have this power granted to you in your brokerage account as well. So if you're gonna use a fraction of margin, which you should only use, by the way, you shouldn't go full margin. In my e-guides, I say to only use 10 to 30% of margin when starting out. Then you can scale it slowly and according to your comfort level. But when you're using margin, start with a small amount and tie everything to the indexes. That way, you don't get wild fluctuations in your account, and Disney is a part of the indexes, okay? But you want to make sure that you're getting dividends to pay back that margin, okay? My margin rate is about 6%, so I'm not worried about dividends covering my margin interest. I'm worried about margin being risky at all. You know, when you trade on margin, they say it's taboo. Well, that's when you're trading stocks, okay? But when you buy safe dividend-paying funds that just generally go sideways, then I'm just looking for the dividends of those funds to pay back my margin, okay? The margin will be gone in less than 2 years because I earn over $100,000 per year in dividends at the channel. All right, so this debt also doesn't show up on a credit check. I can click sell at any time, and banks use my dividends that I receive as income to qualify for loans. So this is how I really get ahead at this channel. I use margin to unlock my life and help me live financially free out of my brokerage account. Now, you don't have to use margin, okay? I just use margin because all the greats use loans to get ahead, okay? So I just choose margin. Some people use HELOCs, you know, home equity lines of credit. Some people use personal loans. I use all kinds of loans, business loans, you name it, okay? So, but I like to use margin as my preferred method of using leverage, okay, and getting ahead. So tie all of your margin to the indexes and make sure those indexes pay you dividends to pay back that margin. Now, Disney doesn't pay a dividend, so how do we, fix this dilemma? Well, Yieldmax came out with the DISO fund, DISO. So this is going to allow us to get index exposure to the Dow Jones with dividends in the process, okay? So we go to the Dow Jones, you'll see here that Disney is one of the larger holdings of the Dow, okay? DIS, it's 1.6% weighting, okay? Now, the Dow is one of the important indexes that I want to tie my accounts to because I like to get performance that goes in between the S&P and the Nasdaq, as you guys know, okay? I like to get a little bit more growth here, but you want to have a balance, okay? So you have to balance growth with value, and the Dow Jones is more of a value sector in my opinion. It's got all the old cyclicals in it, and a lot of these funds are value plays. I mean, a lot of these stocks within the Dow Jones are value plays. We've already tried to construct our own Dow Jones, mock portfolio in a way we're buying Disney today, but we also have some Walgreens, okay, WBA, and that's not doing well for us. We're down 16%, but I don't care what Walgreens does because it has a large dividend and it's a part of the indexes, okay? It's in the Dow Jones index if you go to the last page over here. So we're just trying to construct the Dow Jones index where we can, all right? Because the more index exposure you have, the better correlation you get in performance. So Walgreens here, 0.57. You could explore these other Dow Jones names. AbbVie we bought. It's similar to Merck. We're, again, always trying to get index exposure. So Disney helps build out this Dow Jones exposure, okay? So that's the first reason why I'm buying Disney, okay? It's in the Dow Jones in a big way, and it provides not only indexed exposure in our portfolio and index correlation, but balance between growth and value, okay? So the next thing I want to talk about is how to outperform with Disney, okay? So, and I was going to talk about options. We're going to explore some options, or, selling puts with Disney or buying the stock of Disney with DISO, so a combination of the two. But let's first go into the chart of Disney, okay? Let's go see how this is looking on a 1 year time frame and on a max time frame. Okay, so Disney, let me just go and search through here because it's not allowing me to search in the search bar. Okay, CRF, this is our largest holding. Okay, I'll spare you my lecture on Cornerstone today, because Cornerstone is how I anchor my investments to the indexes, and today we're talking about the Dow Jones, and that's one index. So we'll leave it here. We'll stick with the Dow Jones and Disney for the purposes of this video. So Disney was up 1% on Friday, and look at this chart. It's really cheap, as you can see. It's at almost all-time low, not all-time lows, but it's at Corona lows. So if we go into the chart and zoom in here, you'll see that this is looking very cheap, okay? The December 2023 lows were about where we're at now. And also, if you look on a 5-year chart, you'll see that Disney is near the Corona lows, okay? So 2020, you see that low there in 2020? We're almost there now. All right, so does this look bullish in my opinion? Well, normally I like the moving averages to converge before I get bullish on something, okay? The moving averages here are still kind of far apart and they're sloping downward. All right, I think that you want to buy low, sell high, and you want to buy when there's blood in the streets. So I don't mind owning Disney here because it's really cheap and it's a part of the indexes. So I don't really care if it goes up or down, just like with Walgreens. I just want index exposure, okay? And the dividends from DISO should more than offset any pain that I experience in Disney. Now, Disney, okay, 1-year chart, it's again looking cheap, and on a 5-year chart, it's approaching that 2020 support level. But I'd like to ask my traders in the Discord chat room what they think of the Disney chart, okay? Carbon Zero, what do you think? Flex Time, what do you think? I really value your guys' opinions. And so I'm seeing this as really cheap, but the moving averages are far apart. They're sort of fanning out. They're sloping to the downside. So to me, it looks like we could, persist in a downtrend here. And yes, I know Disney has fundamental issues. Every stock has bull and bear arguments that could be made against it. And here we have streaming and, the issue of does Disney's theme parks along with streaming, can they make enough on their streaming to offset all their overhead costs from Disney? And I'm sure there are many other issues you could think of with Disney, and positive, bull cases you could paint. But I just want to match how much Disney is in the indexes to my portfolio. So if it's 1.6 in the indexes up here, then I just want 5,000 in my portfolio, because that's about 1% in my portfolio, okay? Also, if you go to the S&P, you'll see Disney here is 0.42%. So I just want to get somewhere between the S&P and Dow here. So I don't mind having about 1% of my portfolio in Disney. That would equate to about $4,000 or $5,000 in Disney. But I'm going to make sure to buy in opportune times on the dips. I don't want to just be buying blind here. Again, I would like to hear the opinions of my traders in the Discord chat room if I could. And then also, here's one way we can maximize Disney, okay? I've been talking to another client about how to get more out of her Disney. She owns Disney, but I was telling her, you know, she could sell Disney since it doesn't pay a dividend, and she could buy something else, and then you could instead sell a put on Disney, okay? So here's where we go to options, sell a put on Disney. You know, you could either buy DISO and buy Disney for the combination there of covered call, dividends, and long exposure, or you could sell the option on Disney, which you know is my favorite thing to do, because when I sell options, I lower my margin debt, and I don't add to margin by buying the stock. So not only do I not add to margin by buying the stock, but I lower my margin by selling this put option. I just want to demonstrate to you what the options are going for here. They're pretty nice, okay? So I like to go out to 2025, as you know, because I'm a long-term investor. And let's just put the strike price at 100. Well, look at the premiums we receive, okay? 2,000 in premiums. So that's $20. So 100 minus $20 is 80. All right, so the true cost basis of Disney is 83. So if you were to sell this option on Disney, okay, you could lower your cost basis by 3 points. So you would actually have a lower risk way to play Disney here, and you receive 2,000 in premiums to do it. Okay, that 2,000 in premiums would knock down your margin by $2,000. Okay, I can't place the trade here because it's after hours, obviously. But I won't be selling the option on Disney. Let me tell you why. Because $80 share price for me is too high of a share price to get assigned to. That means that I have to fork over $8,000. Well, in my case, I put the strike price at 100 for Disney. So I'd have to fork over $10,000. And that would add to my margin debt of, you know, it would go from 250 to 260. So I don't mind adding to my margin debt, but I have to have dividends that pay it back. Disney does not have a dividend, and I don't want to have stock exposure on $10,000 worth of stock where stock could just fall, you know, blindly. You never know what could happen to a stock. It has headline risk. It'll fall by more than the indexes many times. So if the index falls by 2%, the stock could fall by 10%. So I don't want to have $10,000 exposed to Disney through the option. So the way I'm going to just get my performance in Disney is to sell an option on UDOW, which I'm going to do on Monday. That's the Dow Jones, and I'm just going to play the Dow Jones as an index. If I buy the triple Dow, UDOW, rather sell a put on it, then I can still get that performance of value and Dow Jones Industrial Names, which will offset the lag in Disney should it go sideways to down from not only its performance, but from the covered call nature of its, of its strategy. DISO should go up with the stock, but not that much because it'll have its upside cap since it's covered calls. But it will fall by the amount of the stock. So I'm going to be very careful with DISO, and I'm going to just buy DISO $4,000 to $5,000 worth. As you can see here, DISO is already in the portfolio. Where is it? I'm trying to go slow, but I'm on my phone. So DISO right here, we have 3,000 in DISO. I'd like to get it up to 4,000 or 5,000, and I'm going to be very careful because I don't want the stock to hurt my performance. I don't want to control the long stock. I don't want to sell the option on it. That's just how you can maximize the performance. I'm just going to maximize performance by selling the option on UDOW and buying these other value plays like Walgreens and healthcare names. I'm going to, instead just build out my index exposure of value names to offset the lag performance of DISO or Disney. That'll do it for the video, guys. Click like or subscribe if you liked it. And if you have any questions, again, email me for my e-guides at aikentod48@gmail.com. They'll be able to answer all your questions. When you buy my e-guides, you get my phone number for free and free access to all the Discord channels. And if you, again, just want me to link my Patreon page in the description below for separate access to Discord, I'll go ahead and do that now. I'm going to open that up to the public, but just be aware that they do not come with my phone number. The link to Discord, the separate link, does not come with my phone number. And also, you probably want to read up on the comments in Discord before asking some of your own questions to eliminate redundancies. All right, so thanks for watching, guys. Talk to you soon.